Good morning. This is Larry McMillan with a stock market update on Tuesday, December 26th. Hope you had a great holiday weekend. I think some people are still celebrating. But we're in a very vacation-oriented week here between Christmas and New Year's, so I don't really expect a lot to happen here, except that we are still in the seasonal bullish period evidenced or called the Santa Claus rally, and it lasts through the second trading day of next year. Basically, our indicators are still very positive. We did have one strong pullback day last week, but that's been overcome now. The SPX chart is quite bullish. It has some minor support at 4,700 and then better support down around 4,540 or so, which is quite a ways below here. But more likely it's going to try to challenge the all-time highs just above 4,800 sometime either this week or probably next. In any case, that would be quite bullish. But we've seen in the past where the market has come to the end of the year in a very bullish overbought state. And in a couple of months after that, things have deteriorated badly. I'm speaking particularly of February 2018 and February 2020. So I'm not saying it's going to exactly happen again, but I would say that it's going to be important to pay attention to our indicators. Right now, those indicators are mostly bullish, though. For example, the equity-only put-call ratios are, the standard ratio is still strongly bullish. The weighted ratio has been downgraded to a sell by the computer programs. However, it's almost near its low, so any movement slightly lower than that would negate that sell signal. So that's a sort of tenuous one right now. Meanwhile, the McMillan volatility bands are in the process of potentially setting up a sell signal, but the market would have to drop to 4670 in order for that to happen. So that's not happening with it at this level either. The breadth has been pretty strong. Even after that one very bad day, breadth has recovered. And so we're seeing the breadth oscillators on buy signals. And in fact, they're so strongly on those buy signals that it's going to take a couple of days. It would take at least a couple of days to reverse the sell signals, if that's even going to happen. The number of new highs on the New York Stock Exchange has continued to be quite large, 183 on the day leading into the on December 22nd. And so that's keeps that indicator positive as well. Meanwhile, we're watching VIX. If VIX starts to rise, then that could present some problems, and so far it hasn't done that. But if it closed above 1630, that would stop out the trend of VIX buy signal. And if it did it in quick fashion, it would also revert the VIX chart to spiking mode, which can be a bearish thing for stocks. Meanwhile, the constructive volatility derivative is positive. The term structure of the futures is sloping upwards. So all those things are positive right now, and I don't have any doubt at all that we'll get sell signals before the market significantly turns down. So I think it's important to just follow our indicators, not try to guess what's going to happen. This weekend in Barron's, I saw, there are very bullish articles, there are very bearish articles. It's sort of hard to sort out the wheat from the chaff without having solid indicators to rely on, but we do, and so we will. Meanwhile, have a great continued holiday week, and have a great New Year's, and we'll see you again next year. Visit our website. We're running some specials right now on all of our newsletters, which do keep pace with all these indicators, so you would be right up to date on everything that's happening there. And meanwhile, have a great week trading.